The U.S. Fed decided to hold the interest rate steady for the first time since July. Let's go to Danielle Di Martino Booth on this, CEO, Chief Strategist at QI Research. Thanks for your time.
And thank you for having me this afternoon.
So the Fed has its eye and has had its eye on employment in the U.S. They see it as steadying now. What's your current outlook for the labor market?
Well, I thought it was an interesting characterization. I was happy that Chair Powell at least spoke to the underemployment rate. We have quite a few white-collar job losses going on just here in the last week or so. About 50,000 have been announced by some fairly large corporations, and we really haven't gotten into the thick of earnings season when some of the weaker players like retailers start to announce their earnings and layoffs along with them. So it was a bit disappointing that they shifted their focus so far away from the labor market when the survey data is unequivocally telling us that we are where we've been in past recessions when it comes to how U.S. households perceive the job market.
Yeah, definitely consumer sentiment has also been very down in the U.S., but that discord between sentiment and actual spending has been going on for the past year.
It certainly has. But I think, as we know, for example, the top 10% account for nearly a third of all hotel spending. There's a very disproportionate imbalance in the U.S. economy between those who are in kind of this top 10% and account for nearly 50% of spending, and the other 90% who are suffering wage disinflation and really struggling with the cost of essentials, such that, as Chair Powell pointed out, we are seeing disinflation in services spending can continue, and that he expects to see disinflation set in on the good side of the economy once the final effects of the tariffs have been wrung through the system.
Yeah, the Fed says the outlook for the economy has improved, and I'm wondering if you think that is because tariffs have worked through, or what else has been holding up the economy in the U.S.?
Well, I think what Powell was speaking to in many ways today was the hard official GDP data. And the GDP data kind of runs in the face of private sector job losses, especially when you net out what we call the recession-proof industries of healthcare and education. The fact that we've actually been seeing job losses in that arena since April of last year. So it was, again, I think what he's referencing are things like, in isolation, the unemployment rate falling to 4.4%, even though underemployment remains very high, as well as headline GDP figures, which, of course, we know will be subject to revision. But that's several quarters, if not years away, given the disruption caused by the government shutdown with our statistical agencies.
As you know, Jerome Powell was asked questions about the legal case that is moving forward against him from the Department of Justice. Are you surprised, or are you not surprised that he didn't really answer those questions, kind of left them alone?
Well, we have to remember that Jerome Hayden Powell is Jerome Hayden Powell, Esquire. So he sounded very much like his lawyer underpinnings, and it was clear that counsel, which he actually retained prior to the criminal charges, it was very clear that counsel had also advised him not to make any comments. He extended that out to really rebuffing any deep commentary on the Lisa Cook situation with the Supreme Court, citing the fact that Paul Volcker himself had gone to other Supreme Court hearings in the past as it pertained to the Fed, as well as the U.S. dollar. So it was the quickest shutdown I have ever seen of a post-FOMC conference, such that the reporters started to repeat after themselves and their questions started to stumble over one another, because nothing of real interest in terms of grabbing headlines was going to be spoken about. And Powell made that very clear from the get-go.
Yeah, they weren't getting what they wanted to hear. So let's talk about catalysts for the rest of the year, good or bad. What could change the path for a rate cut?
So I think, again, as we get further into this earnings season, if we see a spike in layoffs, that as we saw in last October of last year, which was enormous. I mean, of course, we know that those 150 some odd thousand who were laid off last October, they've got 6 to 9 months of severance. They'll be on the unemployment rolls in the coming weeks and months. So, but if we see this trend towards rising layoffs, this next wave continue through this earnings season, then I think that even though although Jay Powell may want to leave office without ever lowering rates again, I think his hand may be forced. And of course, the other thing that we'll be watching very closely going forward, especially in light of Christopher Waller's dissent today, is the jockeying for the position in terms of who's going to be named to replace Jay Powell as chair once Powell's four-year term ends in May. And by the way, that was something else he would not discuss, whether or not he was going to be staying on as a governor at the Fed.
Yeah, it didn't have to do with policy on the day he wasn't going to answer the question. All right, Danielle Di Martino Booth, thank you very much for joining us. Appreciate it.
Thank you.